Hey guys, Steven here, aka the Boiler Master. I've got another big update for you on IQST. So we finally got the second acquisition announcement we've been waiting on. They told us they were hoping to make two acquisitions the first half of this year. The first one was QXTEL, and that did close on April 1st. And now we know the second one is Lynk Telecom. That one is set to close July 1st, which is conveniently the first day of Q3. Just like QXTEL closed the first day of Q2, we're going to have another one contributing the first day of Q3. So that is pretty awesome. We did get the 8K filing on that, so I want to go through the financials and stuff, some of the things we know, the purchase agreement, what it's costing us. Since my last video, we also got April's preliminary revenue we were all pretty excited about because that's the first month that includes QXTEL's contributions. So before I get into all that, though, I also want to let you guys know I've been kind of waiting on the company to say something about it, and they did today on their Facebook. So you guys know I'm going to Washington, D.C. next week. We've got the International Telecoms Week going on. The entire company is going to be there with all of their divisions. I've told you guys I'm planning on going, but I guess it's okay for me to go ahead and say that the CEO and CFO have actually agreed to block out some time for me to go ahead and do an actual interview with them, which is just fucking cool, guys, because, I think this will actually be Leo's first in-person interview ever. He's done a lot of them. He's done some virtual things and stuff, but I don't think he's ever done an in-person interview before. So, I'm not a big channel. He could do that with anybody. Hell, they could pay some of these YouTube promoters with large audiences to do it. But just a big shareholder, big fan of the company, and I'm going to be there. And he agreed to do it just because that's how much they care about shareholders. So I'll probably be heading to DC right about the time I upload this video. So you guys can look forward to that. Make sure you subscribe to the channel so you see when I drop it. And hopefully I meet the entire team there and have a lot more updates outside of that. So we'll dive right into it, but first I do have to tell you guys, obviously I'm not a financial advisor, just a guy that likes coffee, DD, making some charts, and sharing my research with you because I really enjoy this company and everything they're doing. So do your own research, don't invest off of anything that I say. All right, let's dive right into it. We're going to get into the acquisition first because I know you guys want to hear that. After that, we'll circle back into how April did with QXTEL on the balance sheet and talk about how they're doing for the year, which is pretty damn good. So stick around for it. All right, here's the PR. Came out on May 10th, which was Friday. Came out pre-market and gave us everything we wanted to know. The second acquisition is happening. Says IQSTEL announces agreement to add $20 million in revenue and $1 million in net income with the acquisition of Lynk Telecom. Says here, IQSTEL, it's a U.S.-based multinational, fully reporting and audited, publicly listed telecommunications and technology company preparing for NASDAQ uplisting. Today announced executing an agreement to acquire a 51% membership interest in Lynk Telecom. So again, they're buying 51% majority interest and control of the business. Lynk Telecom highlights $20 million in estimated annual revenue, $1 million in estimated annual net income, so that's about a 5% margin. It's not bad at all. Full suite of wholesale and retail telecom services for the U.S. market. So it is U.S. market, U.S.-based company, and they are doing retail service, which is great because IQST is primarily wholesale telecom, and we've been wanting to see them enter the retail market more, and we've been wanting to see them enter the U.S. market more. So strong U.S. network and commercial presence. Retail services expansion plan projected to deliver $1 million in operating net income or more by next year. So they're expanding and going to increase their retail services even further. The acquisition agreed to in the sales and purchase contract executed today is expected to close no later than July 1st, 2024, after due diligence is completed. As I said, July 1st is the first day of Q3. The terms of the agreement call for IQSTEL to buy 51% equity ownership of Lynk Telecom. Comprehensive details will be filed in a Form 8K. That was actually filed last night, this Saturday morning. Now I saw it around 3:30 maybe. Saw the filing. I haven't seen anybody talking about it online yet though, so maybe this will drop before everybody finds out what's in it. That'd be pretty cool. Omar Luna, CEO of Lynk Telecom said, "I'm absolutely thrilled to join the IQSTEL family. The support and synergies that IQSTEL offer are invaluable, and I have no doubt that they will help us double our business in a relatively short period. This partnership is a fantastic opportunity for growth, and I can't wait to see where it takes us." Leandro Iglesias, CEO of IQSTEL, said, LinkTel is a very strategic acquisition for IQSTEL, adding substantial operating and net income in proportion to its revenue base and giving IQSTEL enhanced presence in the U.S. market. LinkTel takes IQSTEL one step closer to realizing our billion-dollar annual revenue goal. So, naturally, I want to point out here Omar Luna, the CEO of Lynk Telecom, as he said, he expects this synergies and partnership, this acquisition agreement between the two, to basically help double the business in a short period of time. I've been telling you guys, people have asked why are they getting these companies so cheap? They only paid $5 million for QXTEL, and they do $80 million a year. And as I told them, I said, they're not selling the entire business. The entire business would see a significantly higher valuation. But when you sell 51% majority ownership, you keep 49%. You earn some of that growth. If that business doubles, triples, quadruples over a few years, you're winning big time. So it's in your favor to partner with a company this big. If you partner up with IQSTEL, you're doing $20 million a year, and you're not growing at the rate you'd like to, you don't have the resources you need, you don't have the abilities, the partnerships. If you can partner with them and they can double your business in a year's time, it's worth it to give them a extremely good deal, because you're 49% ownership of what the company's going to become is a hell of a lot more than your 100% ownership today. Do you want 100% of $20 million in sales, or do you want 49% of $100 million in sales down the road? So the big question here was, what are we paying for it? And that's what's in the 8K. So we're going to dive into that in just a second. But I want to also point out here to you guys, Leo talks about how this gets them towards their billion-dollar goal, but more importantly, it enhances their presence in the U.S. market. So I was extremely happy to see this acquisition. With the QXTEL acquisition, he really emphasized that the value of that acquisition wasn't just their current sales, it was their leadership team. QXTEL has been in business for 20 years. They have an international presence. They're on 5 continents. That is a very strategic move to help IQST expand, because they just bought a worldwide business of QXTEL. But QXTEL did not have a massive U.S. presence either. IQST does some business in the United States, primarily down in Florida. Their interconnections with like Latin America and other places when you call outside the U.S., but they don't have a lot of U.S.-based, U.S. to U.S. call business. That's where this acquisition comes in. So now Lynk Telecom is a U.S.-based business doing a lot of business in the United States with retail customers, and that adds that portion of it to it. So aside from dollar amounts and the revenue and sales these acquisitions are bringing, look at the actual business strategic planning of it. We've got a company that's on 5 continents now, bringing a ton of business outside the U.S. And today, they're closing an acquisition that brings a lot more business inside the U.S. So those are the steps they need to be taking to ensure the long-term success of the business being a worldwide leader, and this being a U.S.-based business with retail customers is the true value of the acquisition, in my opinion. However, it actually is a pretty damn good business too, because they're doing $1 million a year on that's 5% margins, and the two aligning are going to skyrocket that with the cross-selling and growth and IQST's history for that. I'm looking forward to see what Lynk Telecom can do over the next year. And if you guys are curious about it, just a good example for you is look back at SmartBiz. SmartBiz was acquired in May of 2022. The PR announcement on that, when they acquired SmartBiz and Whistle both, it had SmartBiz projected at $6 million a year in annual revenue. The following year, 2023, if you look at the 10K, I believe they were just shy of $17 million. So they went from $6 million to $17 million in a single year. It was like 175% year over year growth. just being part of IQST for 18 months. That's the power of partnering with such a bigger company that can help you open those doors for you, get you in those meetings with those bigger customers. If you've never gotten a sit down with Verizon, you partner up with IQST, guess what? Phone call. We're in a meeting with Verizon. We're in a meeting with T-Mobile. IQST does business with all the major carriers. They've got the key to those doors. That's where that cross-selling growth comes in. And that's what I'm hoping to see with Lynk Telecom, is that 12, 18, 24 months from now, we have doubled, tripled their business. So let's move on. Let's get into the 8K, and let's talk about some of the details on the purchase agreement that everybody is dying to hear. So this is the 8K filing. This portion of it's pretty short. If you go down into it, you can get into the actual agreement. Typically, I always tell everybody, read the entire filing yourself. Make sure you do your own DD, but I'm going to be kind of straightforward with you guys. This one is rather complicated, confusing. If you have never owned an LLC, if you don't have a business degree, some of this is just going to confuse the hell out of you. So I'm going to do my best to explain it to you because I have owned a business, an LLC, and I do have a business degree. So I would like to think I understand it. But I am human and I do make mistakes. So let me see if I can put this out there in a way that makes sense. Let's just get through the first part of it first. On May 10th, 2024, we entered into a purchase company agreement with Omar Luna and Lynk Holding LLC together, the seller, concerning the sale by seller and the purchase of us, but 51% of the membership interest the seller holds in Lynk Telecom LLC, a Virginia limited liability company. The closing of the purchase agreement is expected to occur no later than July 1st, 2024, once due diligence has been completed. All right, so the company provides certified business telephone, SMS, connectivity, and networking services across various sectors in the United States. Lynk Holding LLC recently acquired selected assets from a company known as Voice Telecom. And Lynk Holding LLC has the obligation to pay the shareholder of Voice Telecom the purchase price in that acquisition, which is outstanding. So further into the agreements, it actually details that out. And what gets a bit confusing is you have Lynk Holding LLC and Lynk Telecom. So basically, Voice Telecom was a business that's got a telecom company, and it kind of basically like spun off. Omar Luna is the CEO of Lynk Holdings, and it basically bought the telecom portions from Voice Telecom. Basically bought out everybody else, paying off all the owners of Voice Telecom that own the telecom portion of the business. Now Lynk Holdings owns the entire telecom portion of that business, and that has been created and converted into Lynk Telecom. So Lynk Holdings is a parent company of Lynk Telecom, and they sold 51% of Lynk Telecom to IQST. So now Lynk Holdings is the minority owner, 45% owner of Lynk Telecom, and IQST is the majority owner of Lynk Telecom. So simple enough to understand. The purchase price for 51% membership interest of the company is $1.5 million, and this amount will be paid to the seller, from seller to the buyer, in 12 consecutive monthly payments of $125,000 each. The seller agrees to use these funds for the amortization of the payments that it owes to Voice in relation to goodwill acquisition contract between Lynk Holding and Voice Telecom. So again, first, it's $1.5 million purchase price. That's it. We're paying a $1.5 million and $125,000 monthly payments. There's no dilution tied to this. There's no, I don't see any financing terms. Nothing. We're just going to pay them $125,000 a month, and $1.5 million is the purchase price for the company. So $1.5 million, we're getting a business that does $20 million a year, $1 million a year in net income, and they're expecting to grow that significantly. Now, if we keep reading on, it does get a little more complicated. It says, once we have paid the $1.5 million for the acquisition of the company, and the company has achieved the business goals outlined in the purchase agreement under what we refer to as Phase 1, we have agreed to lend up to $1.5 million to the company in installments of up to $100,000 per month to be used solely for marketing campaigns, promotion, and development of retail services of the company according to the business plan that has to be approved by the company's board of directors. So after they buy $1.5 million purchase price for the company, they have agreed to loan more money to Lynk Telecom for the purposes of growing the business. They're going to help reinvest and ramp up and drive all that growth. And so they're doing more than just buying it. They're also going to invest into the company. But that's a loan. That's not a debt. That's not something we owe. That's not something that we have to worry about as any kind of payments coming due. It's just an agreement to continue reinvesting into growth, which is what IQST does. So nothing surprising there. The disbursement of this loan will be subject to the achievements of quarterly goals set in the business plan of the company. This retail business plan will have the aim of achieving the objective of generating a minimum of $200,000 in operating income per month with immediate staggered quarterly goals. So what's important there is they're agreeing to invest into and loan to and provide some funds for Lynk Telecom to advertise and marketing and grow the business, but they're only agreeing to give them up to $100,000 a month. And for them to do that, the company has to generate $200,000 a month in operating income. So basically, if they're doing $200,000 a month in operating income, $100,000 of that would be IQST's anyways. So IQST is agreeing to put their portion of the net income profits that they're making off Lynk Telecom back into Lynk Telecom to grow the business, and that will be in the form of a loan. So IQST is saying, hey, our portion of profits will reinvest into the business. It's considered a loan. We will get it back later, but our portion of profits are all going to go right back into the business and drive all that growth. So it's not going to come anything out of our pocket. It's not going to hurt IQST. They're not going to have to borrow money or anything to do it, because if Lynk Telecom's not generating that profit, they're not going to get to keep that portion of IQST's profit as a loan to drive that growth. So it actually looks really good. Like I said, it's all just structured so IQST is agreeing to continue reinvesting in and growing the company. Upon the completion of phase one and the business goals and the purchase agreement have been achieved, we have agreed to lend the company up to $1.5 million in at least 3 stages of up to $500,000 per year to help accelerate the amortization of the debt Lynk Holdings has with Voice Telecom shareholders. These loans will be linked to compliance with the financial statements for fiscal years 2026, 7, 8, 29, and 2030. The goals for these years will be defined posteriori by the parties and approved by the company's board of directors. The payment of this loan will be guaranteed with the portion of dividends that correspond to Lynk Holdings LLC when the company makes a dividend disbursement. So basically, like I said, Lynk Holdings, the 49% owner of Lynk Telecom, still owes Voice for the purchase of their telecom business. So Lynk Telecom doesn't have any debt, but the 49% owner, our silent partner, Lynk Holdings, does owe some money to Voice, and IQST is going to loan them some money to help pay that back faster. Probably not the best financing terms that they owe Voice, so they're looking to get the remaining of their debt paid off faster, and IQST is basically saying, yeah, if Lynk Telecom is doing well, it's profitable, part of that reinvesting into the marketing and driving the business growth, we will also, beyond that, if we're profitable and we meet the goals set forward, we will give our portion of profits, loan that, and get that debt out of the way as well, and get everything in-house between Lynk Holdings and IQST and get Voice out of the picture. So as I said, if you get into the purchase agreements, it details a lot of that and the debt obligations between Lynk Holdings and what they owe Voice. The main thing that you really need to remember there is that Lynk Holdings LLC is the parent company that owes debt. Lynk Telecom is the subsidiary we are buying. IQST doesn't owe any debt. Lynk Telecom doesn't owe the debt. but the 49% owner of Lynk Telecom does owe some debt. So that's why I'm saying that some of that gets confusing. And if you actually get into the purchase agreement, which is linked here, it details out all the debt payments and all of that, the amortization period, what they owe, their repayment schedule, and that's all between Lynk Holdings and Voice. IQST doesn't have anything to do with it other than if Lynk Telecom performs and meets its objectives, we're agreeing that, yeah, we'll take some of the profits from Lynk. We will help you get rid of that debt obligation a little bit faster, and we'll reinvest into growing the business, things like that. But anything we do is considered a loan. None of that is owed to them because the purchase price is a set amount of $1.5 million only. So hope I explained that kind of well. I just wanted to make sure that everybody, when they see that in there, if you go into the agreements, that you actually recognize the difference of Lynk Holdings versus Lynk Telecom. So don't think that is our debt. It is definitely not, at least according to this agreement and what I'm reading and my understanding. And like I said, I'm not a financial advisor. So moving on. If, as a result of operations, the company does not reach the projections in the purchase agreement, the business plan for years 2026, 7, 8, 9, and 2030 approved by the company's board of directors, we may retain the stipulated loan. If the company surpassed the projections of the purchase agreement, we have agreed to true up the purchase price with details of the true up contained in the purchase agreement. So if the company Lynk Telecom does not meet the financial objectives that they've agreed to, IQST is not loaning any money. Absolutely not. If we're not making any profit from a Lynk, we're not reinvesting into the Lynk. That is good to see. And then there's also a stipulation in it that if Lynk significantly surpasses those obligations, there will be a true-up payment. So if they perform extremely well, they're beating all of their goals, IQST is making a fortune off of it, the seller will get slightly more, and that is a attachment in the 8K filing, but you can't get to that attachment. It's not a link you can click. So I'm actually going to be talking to Leo and Alvaro, the CEO and CFO, about that on Monday, because I'd like to get a few more details on that, but I don't expect anything unusual there. If they are completely outperforming, making IQST a fortune, there's typically stipulations in all the agreements and purchase prices and stuff like that, yeah, you made us $5 million, you're going to get a little more than 1.5 out of the sale. So I'm sure whatever it is very reasonable. Once this purchase agreement is signed, the manager of the company, Omar Luna, is expected to enter into a 3-year employment agreement with the company that will be executed before the closing date, renewable for a 2-year period to guarantee the operational continuity of the company, and the implementation of business plan will lead the company into productive company with positive net income as established in the purchase agreement. The company shall have a board of directors composed of 3 members. 2 of the members shall be appointed by us, and the remaining members shall be appointed by the seller. The position of president and secretary will be reserved for us. So Lynk Telecom, IQST gets to name 2 of the board members, and the seller gets to name 1. That's because IQST is majority owner, and therefore they will control the majority of the board. The closing of the purchase agreement is subject to, among other things, the company having prepared all accounting information in accordance with SEC standards in such a manner that any audit of the company, if required, may be performed. So the rest of it's all pretty standard. If you go into the purchase agreement, you can see everything is just basically restated there in more detail. It's 20 pages long, and like I said here, the list of exhibits, I can't click those, so I can't get into the details on that, like that true up payment if they greatly exceed expectations. But if you get into the purchase agreement itself, that's where it will detail out how Lynk Holdings bought the telecom business from Voice, and it'll go through all those details for you. So, but basically, let's circle back and reiterate the main points of this is that we are getting Lynk Telecom. It's costing us $1.5 million. We're paying it in monthly cash payments. They're not taking any shares. They are there's no debt tied to this. We're just paying $125,000 a month for 12 months, and we will take majority ownership, 51% of Lynk Telecom. That does $1 million a year in net income, $20 million a year in gross sales. So it's a pretty good deal for us. Outside of that, like I said, they're gonna take their portion of profits, assuming the company continues to hit its goals. IQST will take their portion of profits, reinvest it into the business to grow the business with marketing and advertising. And then if things continue and they continue exceeding their goals, then they will take their portion of profits and reinvest it as a loan as well to help clear up what Lynk Holdings and Voice have in their purchase agreements. So definitely a good acquisition, a really good value for us. Lynk Telecom actually has the same net income that QXTEL had, but we're only paying $1.5 million for it instead of $5 million. So I definitely come out of this saying it's a better deal from the financial side. I was actually talking with some friends about this, and I'm not even sure which one I like more. I love that this gives us more U.S. presence and retail customers, but man, QXTEL putting us on 5 continents was pretty awesome too. So these two combined being the two acquisitions, both within a couple months of each other, I couldn't have even come up with a better combination. It's the perfect strategic move for the company. All right, so that's Lynk Telecom, and now let's circle back. Let's look at our April revenue PR. That was the first month that included QXTEL. So here we are. We got May 6th, 2024. IQST announces $27 million in revenue for the month of April. Company should surpass $250 million in revenue fiscal year 2024, which they could surpass. Yeah, we're going to talk in a second what they're actually on track for. 250 is kind of a joke, but I like it. They underpromise and over-deliver every year on revenue. So May 6, 2024, IQSTEL, a U.S.-based multinational fully reporting and audited publicly listed telecommunications and technology company preparing for a NASDAQ uplisting today, announced achieving $27 million in revenue for the month of April based on a preliminary accounting. So management highlights that the April results indicate the company could exceed $250 million in revenue by year-end fiscal year 2024, while IQSTEL recently announced a strategic acquisition bringing the company's forward-looking annualized revenue to over $250 million, achieving $250 million by year-end fiscal year 2024 would surpass expectations. The company's gross profit surpassed $600,000 in April. The company achieved consistent operational profitability in Q3 last year. Management anticipates the profitability trend to continue, with the company posting close to $2 million in gross profit per quarter. That's great because they turned profitable in Q3. They were profitable in Q4. They've continued to tell us that Q1 margins were even better and improved. There was a PR I covered that's about IQST breaking records every single quarter. So we can expect Q1 to be profitable. And they did $600,000 gross profit in April, which would be $7.2 million gross profit for the year as a trend they're on track for right now, which is pretty good because I think they were about $4.7 million last year, if I remember right. And that's continuing to improve every quarter. So the company recently reported more than $50 million in revenue for Q1 fiscal year 2024 and is now reporting $27 million for just the month of April alone. Additionally, Q2 gross profit per month is almost double Q1 gross profit per month. So $50 million was the preliminary revenue for Q1 we got a few weeks ago. That's preliminary. We will have the Q1 filing. That should come out this coming week. It's due on the 15th, so we'll probably get it Wednesday. unless they want to release a couple days early and drop it early in the week. But they said they did at least $50 million. That was over 100% year-over-year growth, because last year Q1 only did 24,666,000. So we're looking at somewhere over 100% year-over-year growth for Q1, and we're looking at a profitable quarterly report. And now going into Q2, we're already doing 27 million a month. So 50 million in Q1, 27 million per month starting out Q2. 27 million a month is $81 million a quarter, guys. All right, so I'm looking forward to it. IQSTEL CEO Leandro Iglesias stated, "We are thrilled to be heading into the International Telecom Week conference in Washington, D.C., having recently achieved status as a $250 million a year company. We have started this fiscal year with skyrocketing growth. We expect to have notable presence at ITW. I look forward to sharing our experience with you." ITW is the world's largest summit for digital infrastructure executives. More than 7,000 people from 125 companies, many from the largest operators in the world, are expected to attend this year's conference in National Harbor, Maryland. The agenda offers a broad range of topic tracks for the telecoms industry, including future networks, digital divide, SATCOM, and data center. So basically, there's going to be over 7,000 people there. More importantly, it's 7,001, because my ass is going to be there covering it for you. So looking forward to next week. But let's look at this. Let's look at this revenue and what that does for us. So if you pull out your handy dandy calculator, we know they're doing 27 million per month now, and we know that they did at least $50 million in Q1. I've told you guys I think they beat that. I had them down. I think I said they'd do 54 million at least. I still think they might do that, but they told us at least 50 million. So 27 million for April. We've got April through December is 9 months. 27 times 9 is 243 million for Q2 through 3. If we add the minimum 50 million to that they did in Q1, that puts them on track for $293 million this year before any additional growth. And you guys have seen my quarterly growth trends, and they're not slowing down. They're going to do well over that. So, but right now, based on what we know, we can confidently say they'll do 293 million before any additional growth, and before we find out what Q1 actually did, which was something over 50 million. So 293. Now we get to look at Lynk Telecom. So Lynk Telecom is doing $20 million a year right now, and they are expected to close July 1st. July 1st is the first day of Q3, so they will be, hopefully, if they close and close on time, they will be contributing $20 million a year. Half of this year, they would add an extra 10 million to that. So add 10 million to 293, and hypothetically, if they close, $303 million bare minimum before any additional growth is what we are confidently on track for, which I've been telling you guys since January. Nice conservative estimate was 300 million minimum this year, and it's only May, and we're saying 303 bare minimum before any additional growth. So I am expecting I'll be updating this chart soon. I've known they're going to do well over 300 million, but I've been waiting on the number to actually come in before I throw out a new confident conservative projection. But more importantly, I'm waiting on the company to increase their forecast. So that's something I'm going to be asking Leandro about next week is, the annual forecast. I think they will update that sometime soon. I would guess after the Q1 filing. They may go with the end of May to increase the revenue forecast, or I give it a pretty good chance they go ahead and wait till May ends, and so they have April and May both as a baseline with QXTEL contributing and have 2 months of preliminary revenue, and go ahead and give us an update on their annual forecast maybe the first or second week of June, which would be just a few weeks from now. That's what I would do if I was in his shoes, but I'd also be a little bit more aggressive and project 300 million. But he's Leo likes to be conservative. That they under promise, they over deliver every year. Last year, they beat their forecast by 33%. It was an aggressive forecast, and they blew it out of the water. That's the same thing they're doing this year. Forecast is currently 250 million. They're going to blow that out of the water and break 300. So definitely a lot of appreciation there for under promising and over delivering. But that's what I expect to see is an update probably within the next month. And I'll ask him about it next week, see if we can get some details. So that's basically what I got for you guys. Recap on the acquisition. We are buying, Lynk Telecom. It's costing us $1.5 million. We are paying it in monthly cash payments. There is no dilution tied to it. We have no loans tied to it, no debt, just monthly payments over the next year for $1.5 million. What we're getting out of that is a $20 million a year business doing $1 million a year in net income. And just remember, there's no dilution tied to this. That's all I was seeing on message boards on Friday was bashers. Oh my God, how many shares are they going to issue? Blah, blah, blah. Zero. That's the answer. There are absolutely zero new shares, zero dilution at all tied to this. Read the filings, see it for yourself. So that's extremely bullish. And don't forget, I will be in ITW next week and interviewing the CEO and CFO. So like I said, make sure you guys subscribe to the channel so you don't miss that video. I plan on dropping a lot of information next week. Ton of questions, a lot of conversations on message boards. I talk to a ton of shareholders, even offline, personal messages, get on the phone with people all the time. I know a lot of what you guys are wanting to be asked, and I'm going to ask those questions, and hopefully I get some good answers for you guys. So appreciate you listening, and hope I see some of you guys in ITW next week.